I traded with inverse fair value apps for a year straight, and I did not pass a single funded. I was unprofitable, and I decided to change my strategy into this new model that I'm going to go over in this video. And I immediately passed a funded, and I'm up on that funded. I'm one more winning day away from a payout. This is the best trading I've ever done. Like this is all time highs for me. And I really gave inverse fair value apps everything I had. Like you can look back on this channel, I really spent a lot of time trying to master them, and I didn't pass a single funded. Like I've been trading for 2 years, and I didn't pass a single funded until I stopped trading inverse fair value apps. And I didn't even do this out of frustration with that because I was actually up on a funded account. I had I didn't pass the funded, but it was probably the best month I had ever had trading with inverse fair value apps. And I just had this realization that completely changed my trading and made me switch models. And that was that I could read the market. Like I could tell where we were going. I could tell draw on liquidity, stuff like that. But then I would just be sitting there waiting for like, oh, this fair value gap needs to get inverse for me to enter. Like, why? Like, you know what I mean? Like I was missing setups where I knew where we would go, and I was confident in it, and I had an edge with that. Like I could determine with a probable amount of certainty that we would go to here, like enough to build an edge. You know what I mean? Like I was good at finding bias and stuff like that. But then I was just sitting there waiting for us to inverse the fair value gap, and I was like, "What am I doing? Like this is not necessary. This is not. I'm not making money because I can see this fair value gap and we can inverse it, and then I'm gonna wait for that. Like that's not what makes people money in the market. Like I went and looked at every single trader that I admired and really respected and that they're profitable, and it has nothing to do with their entry model. They just know where the market's going to go. And I was like, I'm already there. I can do that. Why am I so bent up in this entry model? It doesn't matter. What matters is that you have good risk management. That's really the main point of an entry model, which is why I still have an entry model that I'll go over in this. But the only purpose of an entry model is to define your risk and define when you're going to enter. Once you have that, it really just comes down to whether you can read where the market's going to go or not and actually execute on it with conviction and trust yourself. Um, so my new model is change and save delivery. I know a lot of other people trade that. It's honestly quite similar to inverse fair value apps, but the main thing is that you can have a change and save delivery with no inverse fair value gap, but you can't have it the other way around. You know what I mean? So it was basically like I was waiting for displacement up because obviously that's just going to confirm that we're respecting whatever PD rate I'm trading from, right? I identify a high time frame PD rate and I want to see us trade away from it, and then I'm going to enter. That's what I did with inverse fair value gaps. Um, but why does it matter if there's a fair value gap? You know what I mean? Like there's no fair value gap here, but we still respected this. We still displaced above it. This is still an entry. This was the trade that I took on Friday. This was actually my biggest trading day ever. Just because I don't know if you guys have noticed with the volatility on NQ, you have to either de-risk or increase risk. Like for example, like say I want to risk $200 right here, I can't. I can risk 130 or 260, so I have to risk a little bit more, which is why this was my biggest trading day ever. But um, yeah, like why does there need to be fair value up here? The whole point of waiting for displacement away from the PD array that you're trading off of is just have confirmation that we're respecting it. You don't need there to be fair value up here. So that's what I noticed, and it made me change my trading. And the reason why I chose change it and save deliveries is because I noticed they were happening, but I wasn't entering on them because there wasn't a fair value gap. And I was like, well, why do I need a fair value gap? And this is no hate to inverse fair value gaps. You know, they're great. They're great. I still use them for confirmation. I still look at them like they're great, and you can become profitable off of them. They just weren't for me because I don't think that's where my edge come from. My edge comes from. You know what I mean? Like my edge is because I can identify drawing liquidity and I have time in the market, and I've built intuition off of that where I can identify probable draws on liquidity. I don't need to wait for a fair value gap. Like there doesn't need to be a fair value gap here for this to be a valid long. You know what I mean? And like I would see trades like this, and it'd be like, if this was a fair value gap and we inverted it, I would take 100%. So why am I not taking it? Like why does that fair value gap become a necessary component of the trade? It just didn't make sense to me. And yeah, this is a great trade. This was on Friday. We ran out opening range low here. We ran the into the data wick, filled that displacement up, respected this 15-minute fair value gap. We had relative equal highs and high time frame buy side up here. But this isn't a trade recap. I just wanted to talk about why I gave up on inverse fair value gaps and maybe help you guys because I was really stuck for a long time. Like I really I'm not exaggerating. I spent a full year trading only inverse fair value gaps. Before that I was trading like break of structure, like how a lot of people started with like TJR and stuff like that. Um and I just wasn't seeing success. I was basically a break even trader. Like I was losing money because you have to pay funded fees, but I wasn't failing fundeds, but I wasn't passing them either. And that's another thing. I've also upped my risk on challenges because I realized like, bro, why am I risking less than 1% on a funded challenge when I can just buy another? Like worst case scenario, I lose the challenge fees. The way these challenge fees are nowadays, like that's nothing. Um, the whole point is to just rush to get funded, and then once you're funded, obviously use good risk management. So I'm really working on building funding, building capital, stuff like that. That's my main focus right now. I'm not really too worried about payouts. Just I want to focus on building capital because once you have capital, you can just execute small and um, yeah, build up payouts. But yeah, let's get into the actual model now. Let me make sure you guys can see this. So this is just like a Google Doc. I had this with all of my there we go, with all of my models I've ever traded. But this is the change to save delivery one. Obviously, this is like just basic filters. I never trade if price is in trapped order flow. So that'd be like if we're respecting a high time frame, like say we're in an hourly bullish fair value gap on one side and a bearish fair value gap on another. Uh, it's hard to decipher which one we'll actually respect. So I usually wait for it to become more clear. Same with SMT on both sides. I don't trade during that. And if Powell is speaking, like I didn't trade today because Powell is speaking later, FMC. Or if there's just a massive overnight move, like if we dump like 3% overnight, probably not trading. Um, I'm definitely not trading. And I just traded the morning session. Uh, this is actually a really good tip here, guys. This could actually completely change your trading. So when we're looking for trades on red folder news days, you can trade before them, but only if there's no high time frame objective met yet. If we run out hourly sell side liquidity, for example, before 10 a.m. news, I'm done until 10 a.m. news. I'm not taking any trades. But to that sell side, I can take a trade. Like say at open, we get a good setup to run that sell side, and that's my draw. I'm okay with taking a trade, but if we've taken an objective yet, then you have to wait for news because we could reverse, we could continue. You don't know. Price is sort of it's where it wants to be already. You know what I mean? Like it's not reaching for anything, so you want to just wait for news to clear that up. Um, yep, this is saying that again. And then yeah, I just identify the draw, high time frame order flow, really important. I look at, if we're respecting 4 hour fair value gaps, hourly fair value gaps, I want to trade in that direction. I look at daily profile too, whether or not we manipulate above or below midnight open. Again, if any of these concepts are something you guys don't know about, let me know in the comments. I'll make a whole YouTube video on any of these. I really want to make a lot more YouTube videos. I want to help you guys get to where I am. I'm not doing great, but like, I compared to where I was, I feel like I can really help people make those improvements to go from break even to actually doing something with trading. Um, yeah, look at like if we're disrespecting high time frame PDRs, that's a good way to tell the draw. I could make a whole video on this paragraph. Like I could make a whole hourly video on how to find the draw. I can't just get into this now. But yeah, basically, and then I use time frame alignment. I mostly take 1 minute change in save deliveries, but if it's like an hourly or 4 hour PDRA that we're respecting, I'll take 5 minute trades. I like 5 minute. Yeah, and again, just wait for change in save deliveries, and then yeah, this is all important stuff. Um, but yeah, guys, I really think that this can help a lot of people. Identify why you think you make money in the market. If it's because of your entry model, okay. But to me, an entry model is just like to tell me, all right, so I think if I'm sitting here and I'm like, all right, we're gonna respect this Peter Ray after news and then go up. I can't just see how did I buy here? Maybe my stop is too tight and I take a loss. It's just identifying when you trade and identifying your risk management. So I don't know if you saw in that doc, stop loss below. That's what entry models are for. It's not to define your trade. You're not entering because we got change in a save delivery, right? Like there's one here. I didn't take it. Why? Because we didn't come to this yet. I didn't take this. Why? Because we had 10 a.m. news. I mean, there's tons of I could probably show you 100 changes to deliveries just on this day. The entry models are relevant. It's irrelevant. It's whether you can identify a draw with probability and then execute on it with conviction. So you don't have to be right every single time, but if you can say like, all right, say right here, I think we're gonna go to here, and I'm right about that 70% of the time. As long as I'm not blowing my account on the 30%, you can make money with that. But the entry model is just telling you when to enter. All right, now we've respected this and changed the save delivery. Now I can enter. But before that, you do not need to be entering, right? Like it just tells you when to enter. You don't want to take trades just because there's an entry model. So yeah, that's why I gave up on inverse fair value gaps. Let me know if anything in this video is something that you guys want me to make a video on. I'll make YouTube videos about pretty much anything. Join my Discord. I'm gonna be revamping it because honestly, right now, it is entirely based on inverse fair value apps, and I kind of don't want it to be that way. I kind of just want it to be the place for you guys to like talk about trading and help each other improve, and me to share things that have helped me improve. Yeah, like, subscribe. Definitely gonna be making more videos, and I appreciate you guys watching. I'm really, I feel like everything's within reach right now in trading, and it feels really good. Just gotta stay focused, keep putting in the work. All good things will come. And yeah, I think the overall message of this video is just like, if you're struggling with something in trading, you don't have to stick with it. Like you don't have to. You don't feel attached to any strategy. Obviously, don't be flip flopping between strategies, but if you've really given it a lot of time and a lot of effort, maybe it's just not for you. Like I really am not flip flopping strategies. I spent a full year on inverse for value gaps. I could show you guys. I I took hundreds of inverse for value gap trades, and I was break even. Like it just wasn't for me. And maybe that's where you are. Maybe this can help you. Maybe you can make a change.